Hello, everyone. This is Brittany Button, long-term care insurance specialist for Art Jetter and Company. Today, we have Rob Johnson, sales vice president for Lincoln Financial, joining us. Now, we are going to be reviewing updates to Lincoln Financial's MoneyGuard Fixed Advantage solution. While having a lot of similarities of MoneyGuard 3, you'll find MoneyGuard Fixed Advantage comes with a few enhancements. Lincoln Financial also recently lowered new business rates, making it a more competitive option for some folks out there. We do have some handouts available, so please make sure to take a moment to download those. Also, at the end of the session, we will answer any questions you may have. So please type those into the chat box, and we'll address those again at the end of the presentation. So Rob, let's get started.
Great. Brittany, I appreciate the invitation to join today. And thank you for carving out time. We'll make sure we get this done in the next 30 minutes so you can get on with your end of November duties here. So let's get started. So this year, for those of you that are familiar with the hybrid LTC options and the LTC options currently out in the market, Brittany's well aware here, there have been more changes and actions by insurance carriers than there's ever been in one single year. We've seen carriers adjust pricing, almost all for the positive. We've seen a carrier exit. We've seen carriers enter the space. So more options than there's ever been. This is just a snapshot of just a few of the ones that I could think of prior to the call of changes this year. So what we're obviously going to do is focus on the Lincoln MoneyGuard updates. In this space, this hybrid LTC space, or might have called it the asset-based LTC space, looking at the end of the third quarter LIMRA numbers, we again finished number one. In fact, we increased our percentage of market share over the number two carrier in the space during the third quarter. So tons of positive things happening. You'll see we'll highlight those today. Mainly, certainly that price improvements that we rolled out in September have played a role, but even prior to that update, we were up almost 40% this year in terms of sales before we did that price change. A couple things that are different. If you're familiar with MoneyGuard 2 or MoneyGuard 3, we've introduced two new enhancements: no cost, built-in benefit transfer rider, and Flex Care Cash. So the product that you already loved now has two additional features. We've also seen a great deal of success with our e-interview platform. So we've come a long way in the 34 years that MoneyGuard has been around in terms of our underwriting process. E-interview has made things even better. And then finally, I'll touch on just a couple slides as far as key differences between reimbursement and indemnity. Certainly both have their strengths. I just want to bring to light a couple things that a lot of folks don't think of when they think about those two different options. So let's move forward. So pricing changes. MoneyGuard Fixed Advantage is our fixed MoneyGuard solution in 48 states. All states except California and New York. We don't offer any LTC options in the state of New York, unfortunately. But during September, we saw price improvements on that product anywhere between 0 and 21% on average, about 8% less. Those older ages, those in their 60s, saw an average decrease of about 10%. I know I ran one earlier today for a 67-year-old that we had previously looked at in August. That had a 17% decrease. So they were looking at $100,000 to buy them a certain benefit. Now that same benefit only costs them $83,000. So significant price changes there. And then we brought back a policy design that we hadn't had in a couple of years. That's a 6-year plan with 5% compound inflation. Typically, you're gonna see that be available for those folks in their 40s, 50s as an option for them. The vast majority of our plan designs are still with a 3% compound inflation. Unlike most updates that we have in the industry or in our product line, we didn't leave our friends out in California out in the cold. That product also had a price improvements anywhere between 0 and 18%, on average about 6%. Again, most of those Significant price improvements were for folks in their 60s. Also brought back the 6-year 5% compound inflation plan design. So as a whole, significantly more competitive as of September 12th than we've been. So if you looked at us earlier in the year, this is a great time to revisit that opportunity. Or if you're thinking about clients, especially in their 60s, that may have been on the fence previously, or maybe have a birthday coming up, this is an awesome time to revisit that client. We also have something going on between now and the end of the year. We have a special underwriting program for every client that, regardless of marital status, will get the couples rate. Regardless if they're single or widowed, they can still get that couples discount, which generally ranges between 10 and 12%. The only caveat now is that we've had this this special program for about 5 or 6 weeks now. If you have a client, we just need to have that policy placed by Friday, December 30th. So if you have someone, Brittany and her team can run an illustration for you. Great opportunity on top of these price improvements that we've already seen here on the screen to also get a couples discount. If it's funded with a 1035 exchange, which I wouldn't discount that. I cover 10 states for Lincoln. That's almost 20 to 25% of my business comes from funding with using cash value from an old life policy. That policy, if they're looking to get that couples rate, that 1035 just needs to be initiated by Friday, December 30th. So we still want the application here fairly soon so we can get that underwritten and hopefully approved, and then start that 1035 exchange. So great opportunity here for the last month. But again, if there's someone you have in mind, I would reach out to Brittany today or tomorrow to get that process started. So that's the price improvements. Again, now you're going to see Lincoln, where we were always usually in the top 1 or 2 in leverage. These last 2 years with the low interest rate environment, we weren't always in that first or second position. Now with these price improvements, you're going to typically see us either offer the first or second most leverage for most clients, especially the older ones. What else is new? So Rob, I'm familiar with MoneyGuard. I know you have benefit periods between 3 and 6 years, inflation between 3% or 5%. What's this benefit transfer rider I've heard about? This is a new feature for MoneyGuard Fixed Advantage that's built in at no cost. In fact, you won't even see this on the application. But what we wanted to do is give those beneficiaries more flexibility on what they decide to do with that death benefit. So for the purposes of today's discussion, let's say I have a couple, they each have a MoneyGuard Fixed Advantage policy, and they each have a $100,000 death benefit. If he were to die at age 85 and he had never used any long-term care, so he still had his remaining death benefit, up until the rollout of this product in May, her only option was to take that death benefit. Benefit transfer rider will now give her the flexibility to decide, does she want to take that death benefit? She could still do that if she wants, or she could take that death benefit and purchase more benefits on her own policy, or do a little of both. She might say, you know what, I'm also 85. I don't need the death benefit. I could use a little of it. Let's say I'd like 30,000 of that today, but I'd like to take the remainder of that death benefit and roll it back into my own MoneyGuard policy. Here's what's nice. She does not need to decide what she plans to do at the time of application. No one has their crystal ball, so we allow them to make that decision at the time of death of that other individual. So at that time, she can decide, what does she want to do with that death benefit? If she's in her 60s, she may want the death benefit. If she's in her 80s, maybe unhealthy, she wishes she had more long-term care. This benefit transfer rider gives her the option. What does it do for her policy? It increases her total long-term care benefit pool. It increases her death benefit, and it increases her total length of protection. And this is not just a dollar for dollar, and I'll show you on the next screen. We're going to leverage those dollars. So it's not just, hey, we're rolling that 100,000 and back into her policy. We're going to leverage that to make it attractive to her. Second bullet point, I think this is probably the key. There's no additional underwriting required when benefits are transferred. So going back to my example, he died at age 85. She's 85. She could already be unhealthy. She could have Alzheimer's. She could be in a memory care facility, and she could already be using benefits on her own MoneyGuard policy. And Lincoln's going to give her the opportunity to get more long-term care. And Brittany knows a lot more about long-term care than I probably do, but I don't know of any other option out there where someone on claim, unhealthy at age 85, can get more long-term care. That's what benefit transfer rider is going to offer. I mentioned previously that the decision that they are going to do is not required at the time of purchase. And here's the nice part. You'll see this on the next screen when we look at an example. Those benefits that are transferred over to her policy, assuming most folks have at least a 3% inflation rider, when we add those benefits to her policy, now her new total pool will compound, not just her own pool. So let's look at an example. If we assume, we'll call her Betty here. She had 100,000. She had a MoneyGuard policy with $100,000 death benefit. At age 80, she had 463,000. She had chose our 70% ROP option. She had a monthly benefit of about $6,000 a month. We know she's elected a 3% compound inflation rider, so you're going to see 3% compound growth. At age 84, her pool of money is up to $521,000. Her death benefit's still the $100,000 that I mentioned. Now, Bill, Betty's husband, passed away at age 85. She's 85, already having health challenges. She doesn't need the death benefit, but she wants more long-term care. So she elects at that time to move that $100,000 death benefit back into her own policy. How does that impact her policy? You're going to see a lift in her surrender value. So her surrender value jumps from 70 to 158. Again, most folks don't surrender. 34 years that MoneyGuard's been around. Only about 1% of folks have ever surrendered it. Most of those happen, frankly, during the first 6 months to 1 year. So most folks aren't surrendering, but you're going to see a lift in her surrender value. Here's what's nice. That death benefit for her goes from 100 to 208,000. So you see about an 8% lift. We're going to leverage that $100,000 death benefit by about 8%. For males, the lift is about 7%, but she hasn't lost out on that death benefit. She's really just kind of kicked the can down the road, made it a second to die policy. Now she's got a $208,000 death benefit. But right here, you're going to see her long-term care benefit goes from $521,000 to $690,000 of tax-free LTC benefits. Now the $690 compounds. So 1 year later, we're already at $710. So if you look at age 84, Betty had $521,000. She transferred $100,000 of that death benefit into her own policy. By age 86, she has $710,000 of LTC benefits. So she's had about $190,000 increase in total LTC benefits. Her monthly benefit remains unchanged, still compounding by 3%, because now we have that same monthly benefit divided by a bigger pool. Her duration grows. So for Betty, her total pool of money, again, this was a no cost to her. This wasn't an additional cost when she bought MoneyGuard, increased by 30%, which is a nice option for someone that's single or widowed to have more long-term care. That increased her total benefit duration from 72 months to 90 months. We also increased her death benefit from $100,000 to $208,000. Again, this is something that there's no other carrier offering this type of flexibility. There's no additional cost. It's just another option for clients when they get to that point of needing long-term care. Now, the other if any of you are out there using WinFlex to run your own illustrations. Hopefully you're relying on Brittany and her team. You can illustrate benefit transfer rider in the software, and this screen just shows you how to illustrate that or where to illustrate it for those of you that might be using WinFlex. The other benefit that we've enhanced, previous to July of last year, MoneyGuard only offered the option to reimburse if you were receiving home care, you're in an assisted living, nursing home, hospice care, memory care, but it had to be qualified care. Then last July, we offered the flexibility to get up to a third of your benefit in cash with our FlexCare Cash benefit. This has been enhanced as of this past May with the rollout of MoneyGuard Fixed Advantage. Now you can get up to $4,500 of your monthly benefit in cash, and we've made it extremely easy just to fill out that form to say, hey, someone provided informal care for 3 days this week or 5 days this week. We see most of this coming down the pike where it's just, hey, we're not going to a facility. My spouse or my daughter or my son is going to take care of me. This just provides that flexibility. So there are carriers out there that are full reimbursement, and then there are indemnity style policies. This is kind of right in the middle there as far as offering the best of both worlds. And we'll talk a little bit about indemnity and reimbursement and just some of the differences here shortly. This is what the form looks like. I said it's easy. They enter their policy number, their name, what year, and then what week, and then how many days. So if I said in this example, my wife took care of me 7 days a week, each week of the month, and my monthly benefit at that time was $9,000, Lincoln would cut them a check for $4,500 for their to use however they want. If, example, the spouse only provided care 5 days a week, and then they had a home care agency come in the other 2 days, the nice part about that is that remaining balance of that monthly benefit can still be used for reimbursement of qualified care. So really the best of both worlds. This is the form. It really couldn't be any easier. There's a step 3, and it's just signing the date and their signature, and they're printing their name. So fairly easy to file a claim on FlexCare Cash. This is also built in to MoneyGuard Fixed Advantage. So the 48 states, not yet available in California, hopefully at some point. But for MoneyGuard Fixed Advantage, where I know most of you are, this feature, this flexibility is built in. E-interview. Lincoln's come a long way. In fact, MoneyGuard has really been the standard of which all the other competitors or insurance carriers. And the good part for Lincoln is they've pushed Lincoln to become more innovative, to introduce FlexCare Cash and benefit transfer. But when we started offering MoneyGuard 34 years ago, we ordered paramed exams. We did ordered medical records. About 19 years ago, we stopped doing that. We moved to a process where we had an individual fill out an application, and then they did a telephone interview with Lincoln. Brittany, like myself, knows that sometimes it's easy for that phone interview to go sideways. Inevitably, once a month, I get a call from an advisor who said, Rob, you guys declined my client. What happened? He's my number one client. He's an engineer at Boeing. He's very sharp. Switch out the company, but I only get a call one of these at least once a month. And then we pull the call and we listen to it. And the individual, he or she joked about memory loss. And it's difficult when you're trying to answer health questions and you're hoping for honesty and no joking, and then they are talking about memory loss. Clearly not what we want. We also know that phone interviews can be nerve-wracking. Myself, I wrote a policy with another carrier 14 years ago, before I was at Lincoln, a traditional LTC or standalone LTC plan. My mom had the phone interview, was very nervous, and was declined. What we want to do with the e-interview is give folks to really meet them where they're at. There will be folks that would like to just talk to someone. And there will be folks that don't want to get on the phone, would rather answer those health questions on their schedule, at their convenience, take their time, start and stop. That's really the impetus behind e-interview. So there will still always be an application. They can do it on paper or they can do an e-application, and Brittany and her team can help you direct you those to those. The bottom of this workflow is how it's been. You called out, we contacted your client, they scheduled their phone interview. Typically, folks were scheduling it a week to 2 weeks out. Often what we see, and often what we'll see is, or experience is, we play phone tag on scheduling it. Then they finally schedule it and they do that phone interview. We now offer the option of, instead of calling them, is sending them a link. Allow them to answer the health questions on their phone, on their iPad, on their computer at their schedule. What's also nice about this is they could answer the first 10 questions, and especially at this time of the year that the Amazon driver is at the door again, I can pause, I can come back, I can finish it tomorrow. 3 days later, the link we send them is good for 10 days. If they're 61 or older, and every LTC carrier is going to have some level of cognitive screen, and to be frank, the cognitive screens are pretty standard. If they're 61 or older, we will do a 15-minute phone call for a cognitive screen. But then it goes back to that same underwriting. Our goal is to make a decision once we have all the health information in-house here at Lincoln, to make a decision within 5 business days. Right now, we're landing right around 3 business days to make a decision once we have all the health information in-house. So again, multiple ways. There is a third option, which I didn't even put on here. There is an option to answer it on paper. The problem is, on paper, that might trigger more follow-up questions, which would result in a phone call anyway. Where that online PHI, we've built it to be intuitive. So if they've answered yes, it automatically generates the follow-up question. So really nice process. Submission to place this year on the difference between online PHI or phone PHI. Folks that did an online PHI, on average, place that policy 10 days faster than those that did the phone PHI. Really makes sense if you think about playing phone tag or them scheduling it out a week or two versus, hey, I got the link and I can do it right now. That's the key difference. So what I want to do is show you what it looks like. What is my client, if they want to do this, is the email clear? So clearly they're going to get an email here that says, like, in this case, Sarah Smith, we received your signed MoneyGuard application. In order to initiate the process, you hit start. That link is available for 10 days. If it expires, we could just get them a new one, but we want to have a defined period on that e-interview link. And then we're going to let them know what to expect. Hey, the application takes about 20 minutes online. Application link is good for 10 days. You could save your progress. After 40 minutes of activity, the interview will be logged out. If they're 61 or older, they'll be contacted to schedule a one at a time that's convenient for them. And then what they'll need. Hey, medical history, symptoms, anything you've been treated for in the last 10 years. This is pretty standard with all the carriers. List of medications, list of doctors. We're going to let them know, hey, this is what, before you get started, this is what we're going to want to gather, rather than being maybe blindsided on a phone call. They're going to verify who they are. And then they're going to start working on the application. This is what we call the LTC supplement. These are those knockout questions that if they answer yes to one of these, typically they're not insurable. You know, you look at it, Alzheimer's, Parkinson's, MS, muscular dystrophy, type 1 diabetes. But you can see across the top here, it shows them steps. Step 1, questions 2 through 6, 7 through 13, and summary. Almost looks like one of those pizza trackers, or if you order something online, maybe it's Jimmy John's. Hey, I could track my order, know where it's at. They'll know exactly where they're at in the application as they move through here. What we're also going to give them the option to do is to print a copy of their answers or save a PDF. So they've made it through these knockout questions. Again, the long-term care supplement here. They've answered all 13 questions. They got to the summary. They've verified that these are indeed their answers. Then they can just click PDF, save a copy of this. So they know, we know, everybody knows exactly how they answered. Nice option versus a phone call where you can't go back and review all your answers there. That is e-interview. Again, I would certainly drive as many folks to doing that option as possible. The last thing I want to touch on, and again, I'm not here to bash indemnity carriers. I have friends who work for some of my competitors that offer indemnity options. And again, we look at this hybrid LTC space or something called the asset-based LTC space. We look at all the carriers, and then there's about 10, 11 right now. The number 1 and 2 selling products are both reimbursement models. Now, I say reimbursement. Rob, you just told me you had an informal care benefit. Yeah, we have that cash benefit now, that indemnity option. So we're kind of merging in between. But what I want to do is talk about kind of some things that when you get an indemnity style illustration, there are some other things that a lot of folks don't think about. If they're receiving qualified care. Now, certainly if you're receiving qualified care in a home care, in a nursing home, assisted living, adult daycare, hospice care, memory care, I would argue every time that the reimbursement model is actually easier for the insured and requires less steps. So if we look at this model here, so if they're receiving qualified care, if we look at an indemnity style policy and reimbursement, the individual goes on claim, they qualify for LTC the exact same way, 2 out of 6 ADLs or severe cognitive impairment. Advantage to Lincoln that we're seeing here is that indemnity style policy has a waiting period or elimination period. Essentially, it works like a deductible for them. With Lincoln, and we didn't even talk about this today, there is no elimination period. There's no deductible for them to satisfy. So the minute that they qualify, they're benefit eligible, they qualify for benefits. And when I think about that, it really works like an extra cash benefit, where if I said that average insured had a 2-year claim, we know about half of LTC claims are done by a year. Let's say, for argument's sakes, the claim lasted 2 years. If Lincoln was able to offer benefits 90 days faster than most of the other carriers, that's additional funds that aren't paid out. So with an indemnity style carrier, you have a waiting period, elimination period. We said the cost of care today is $5,000 to $10,000. $5,000 for assisted living and home care, $10,000 for nursing home. If the average MoneyGuard buyer is around age 60, our average claim last year was age 83. What do we think the cost of care is going to be 20 to 25 years from now? Conservatively, and I think most would agree, especially with where inflation's at these days, the cost of care would probably double, if not triple, over the next 20 to 25 years. So we're saying it's $5,000 to $10,000 a month right now. That's $10,000 to $20,000 a month out of pocket if you say a 90-day elimination period. That's $30,000 to $60,000 additional out of pocket before you get a penny from that policy. With Lincoln on a reimbursement model, you can set it up on a direct bill for automatic billing. What does that mean? That means just like when you and I go to see our doctor, they take a copy of our insurance card, they verify, hey, Rob, do you still have Blue Cross? Yeah, I do. That doctor's office bills your insurance company bill pays that provider. We could do the same thing here at Lincoln. So that facility here on the bottom would send the bills to Lincoln, and Lincoln would pay those providers, thus allowing, here in the checkbox, those family members to stay out of that billing and bookkeeping process and supervise that care rather than be the one to provide it. We're an indemnity style carrier. Of course, the carrier will send you the check. Policy owner receives the monthly benefits if they're receiving qualified care. they're still responsible for collecting the bills, writing the checks to the facilities, and making sure that those payments get paid in the appropriate amount of time. Again, I don't want to do that at someone at my age, much less when I'm in my 80s. So that perception that I got to pay that provider first and then send the bill to that big bad insurance company and wait to be reimbursed, that's not how it works. Most folks set up on a direct bill. If folks do pay the bill first and then submit the bill to Lincoln, once that claim's been set up and approved, last year our average turnaround time to get that check cut to the client was less than 5 days. Less than 5 days to get reimbursed. But again, for my money, I'm going with the bottom, set up on a direct bill, keep me out of this billing process. That's what Lincoln's going to offer now. If they receiving care from somebody at home, hey, we got the Flex Care cash benefit. What folks don't also talk about is the burden of an indemnity style contract. And again, this applies if they're receiving the Flex Care cash benefit. But paying an informal caregiver essentially turns you into an employer and the caregiver into an employee if that compensation is more than $2,400 annually, because that's what it was in 2022. The carve out is for spouses. So if the spouse is providing care, that wouldn't come into play. But if you're paying a daughter or a neighbor or someone else, by the letter of the law, you've become an employer and they're an employee. As an employer, subject to the complexities of tracking, reporting W-2 and W-3, paying Social Security and Medicare taxes equal to a little over 15% of compensation plus state unemployment, it just creates an extra burden. It also involves filing a Form 8853 if they're receiving indemnity payments. Often that's not talked about. That could trigger a closer look because the IRS then knows that they're receiving an indemnity style payment. That Form 8853, the amount the policy owner, may exclude is limited to that IRS per diem limit, which we saw a lift for going into 2023. But Lincoln's reimbursement benefits are not required to be tax reported. Also, if they're paying multiple people, if they're paying their daughter and a neighbor or another informal caregiver, there's also an 8852 if there's multiple payees. So things just to be aware of, that there is a little more of a burden for indemnity style policies. And again, I'd argue if you're receiving care at home and a nursing home, assisted living, adult daycare, hospice care, setting up on a direct bill, again, for my money, I would rather supervise that care rather than be the one to provide it. Last thing before we go to questions and I turn it back over to Brittany is, how do I get resources? Rob, this sounds great. How do I get a brochure, information on your claims or underwriting? This website, which is lfg.com/MG Launchpad. So lfg.com/MG Launchpad is our MoneyGuard Solutions resource library. There was no login here. You don't need to have a Lincoln number. You don't need to remember a username or a password. Back as a Lincoln wholesaler, this is my go-to for all things MoneyGuard, because I hate saving things and then they're outdated quickly. I know that I'm using this resource library. I'm getting materials that are up to date and that are valid. So again, great page to bookmark and make it easy to find the resources that you need. Brittany's your go-to. I want to make that very clear. Brittany and the entire team at Jetter have been there countless times. Some of the best people in Omaha, Nebraska. If you have questions outside of her business hours, I'm available, as is my internal partner, Rob Choi, the two Robs. That QR code on the screen, if you take a picture of it, you can schedule time with me. My calendar is linked to that. It'll show you my availability. You don't even need to reach out to me to ask for time. But if you want to run something by me, Brittany's unavailable. Feel free to reach out if there's anything I can do to help you. Brittany, I want to turn it back over to you and see if there are any questions.
All right. Well, we do have some questions, but before we get to that, I do want to echo Rob. This was probably about close to 2 years ago. We were working with MoneyGuard 3, and the case we're working with was a gal. She was, I think it was like mid 60s, looking at a hybrid solution. And Rob, no offense, unfortunately, the most competitive carrier at the time was actually Nationwide's Care Matters. So the producer and I present, explained to her all the features, explained to her that it's cash indemnity and what that means. And it was the funniest thing ever. This gal was like, I do not want cash. I do not trust my children with it. So with that, went back to the drawing books, and we wrote a MoneyGuard 3 case for that gal. So just keep that in mind. You'd be surprised, the folks out there, that cash is not king for them. But that's probably a case I'll never forget. It happened a few years ago.
And echo what you just said, I'll do client seminars fairly frequently, and I'll ask folks, who in the room wants their loved ones to take care of them. And it's funny, it's almost 50-50. There will be the folks that say, I want my daughter, I want my spouse, I have somebody else in mind that I want to take care of me. That's fine. But there will also be the folks like my mom that said, I do not want my son taking care of me. And that's where, if you have the ability to do something like MoneyGuard, they are confident they're going to want qualified care. That's where MoneyGuard really shines. So.
Exactly. All right. So on to questions. We do have some here. Folks on the call, you still have time. Type in your questions in the chat box. We'll get those addressed, and also gives you some time to download those handouts if you haven't done so already. So first question, Rob, does Lincoln Financial allow for a single premium deposit with ongoing premium payments? So maybe a partial 1035 exchange, and we're wanting to build that policy to be stronger.
Yeah, we do. In fact, so you could do a single premium of cash or a 1035 exchange in year one. And then if you had ongoing payments, those could start right away in year one, or they could start in year two. So for your example, we could do a 1035 exchange with that cash value from that old Northwestern Mutual policy in year one. And then we could start an annual payment or monthly payment, quarterly, whatever, starting in year two.
Perfect. And then I just want to notate, Lincoln Financial's MoneyGuard, we did see a little difference in premium duration structure. So we are looking at single pay or a 2 through 10-year premium payment. I know those who are more familiar with MoneyGuard 2, MoneyGuard 3, where we're able to do, say, a pay to 65. Unfortunately, they did take that away from us. So, Rob, you can file that under complaints.
Except in California.
Correct.
California 65.
Yeah, California is always going to be an exception. But anyhow, moving on. Ooh, this one's a good one. So, Rob, you had mentioned, the tax liabilities of indemnity and paying a friend or family member. Looks like the figures you showed at $2,400 annually was for 2022. Have you heard if there's going to be a change for 2023?
I have not heard. In fact, I gave this same presentation earlier today, and I have an email out to my advanced sales team to see if we have that number for 2023. I think it's going to remain unchanged, but I'm waiting to verify. And Brittany, I'll let you know as soon as I get an answer back.
Perfect. Yeah. So the individual asking that question, I'll reach out as soon as I hear from Rob. So we'll play a little bit of telephone there. Okay. Looks like we've got one more question coming in. Ooh, somebody who's familiar with MoneyGuard. So does MoneyGuard Fixed Advantage offer a residual death benefit?
It does. It's still the same. It's on MoneyGuard 2 or MoneyGuard Fixed Advantage is 5% of the specified amount.
And so for some of you on the call who might be not familiar fully with the plan or really with hybrid long-term care products, not all, but most of the carriers out there offer what we're calling a residual death benefit. So if the client uses the entire policy for their long-term care needs, there will still be an amount that'll be passed down to a beneficiary. So as Rob just mentioned, it's 5% of the face amount. So I almost like to think of that as a built-in final expense policy. You've used your plan for long-term care as indicated, but Great. We're still providing a little bit of benefit to go to a designated loved one.
Yeah, you're spot on. I always say a mini little final expense policy, which reminds me something I didn't mention about benefit transfer. Benefit transfer rider that we talked about earlier is not limited to spouses. Really what it does is it opens up to some generational planning. So if my mom were to buy MoneyGuard, and let's say my brother and I bought MoneyGuard, we're 25 years younger, we buy MoneyGuard. When my mom passes away, if we're MoneyGuard policyholders and we're her beneficiary, we each can decide what to do with our portion of the death benefit. My brother might say, you know what, I want the death benefit today. Me working in the extended care space, I might say I would prefer to have more long-term care. We can each make our own decisions. Again, not limited to spouses as long as they each have MoneyGuard and they're each other's beneficiaries. I did get the question earlier today, would this, if I have a client with MoneyGuard 2 or MoneyGuard 3, benefit transfer rider only works on MoneyGuard Fixed Advantage and all new iterations of MoneyGuard moving forward. But I didn't want to forget that. But thanks, Brittany.
All right, perfect. Well, looks like that wraps up our questions. So I want to thank everyone for joining us today. We always appreciate it when you take time out of your workday to come hear us speak with y'all. And also, Rob, of course, thank you for co-piloting today's session. If you think of any questions or would like a more one-on-one discussion, feel free to reach out to our team. We can be reached at 800-228-0008 or shoot us an email at ltci@jetter.com. So I hope everyone has a great afternoon, and I look forward to speaking with y'all soon. Thank you.